Mining giant Anglo American has announced the sale of 3 platinum mines in South Africa to Sibanye Gold for R4.5 billion. Sibanye is the country's biggest gold producer. This comes as the platinum industry struggles with falling prices and industrial unrest. Now, Amplats says the sale is part of a move towards low-cost operations, as it removes loss-making elements from its portfolio. The platinum price has dropped by about 40% since 2011. The metal is mainly used in jewellery and catalytic converters. The total worth of the deal depends on the cash generation performance of the assets being acquired. The deal is expected to be completed within a maximum period of 9 years. Well, Hebron Smith of NEFG Fund Management says the deal is mutually beneficial. He says Sibanye are masters of marginal mining and have proved they can turn around assets in the gold sector. Well, let's get more details now on this deal. Gunter has Sibanye Gold CEO Neil Froneman with him. Gunter.
Thank you, Devin. Well, let's speak to Mr. Froneman straight away. Welcome, sir.
Good afternoon, Gunter.
The deal, when I look at it, to me, it looks a little bit complicated. Can you break it down for us in layman's terms?
Yes, very simply, there's a upfront payment, which I call a commitment fee of R1.5 billion. Then there is a out of cash flows in the future for the next 6 years, we'll pay 35% to Anglo American. If we have not achieved the minimum payment of R3 billion in nominal terms, there's another 2 years where we can pay either in cash or shares. The initial payment of R1.5 billion can either be cash or shares. And then in terms of the purchase of concentrate agreement, there's downside protection should the platinum price go lower than this and the operations are not cash flow positive. And that's for 3 years, and there's R800 million that Anglo Platinum has set aside to fund the losses should that occur.
That raises a question of the assets being managed by who and the operational costs. Who's going to carry that?
Well, initially, until the transaction closes, the assets are really managed by Anglo American Platinum. We expect that'll take about a year. There's Competition Commission approval, there's regulatory approvals from the DMR and so on. We have agreed to a plan based on the due diligence we've done. Anglo American will manage the assets until that point in time. We'll take over management once we do. The profits and losses become for our account with those provisos that I mentioned in the beginning.
What can we look forward to in terms of balance sheet effect?
It depends on how we pay for it. We've got the option to use cash or shares. Cash, we've got cash on our balance sheet. We could have more cash because the transaction would only close in a year's time. Yes. We have got revolving credit facilities, and we are raising a bridge facility should we need it as well. It's all going to depend where our share price is at the time, whether we use cash or shares.
Downside protection is one of the key elements to make it happen. But now, you obviously had certain assumptions about the market when you went into that. What if that goes completely pear-shaped and the market falls out of the bottom?
Certainly that can happen, and then we would have made a very bad investment call. But we are not experts on the platinum market. We've relied on experts. We've done our own analysis. I think it's unlikely the platinum price will go lower for longer. Yeah. Certainly we don't see a 3-year scenario, which is where we've got the downside protection. Our view is that the platinum market is moving into deficits. What we can't tell you whether the price will respond in 3 months, 6 months, 9 months, or a year. But certainly it seems unlikely that it would do the opposite over a 3-year period.
CapEx plans, you've got quite hefty plans for the operations. When do you start investing? How much? And what do you aim to achieve with it?
Well, that capital is part of the agreed plan. We've already commenced, or Anglo American have already commenced spending that capital or budgeted for it. It's about R1 billion, well, it's actually a bit more, about 1.2 to 1.4 billion rand a year for about 4 years. 50% of that is stay in business capital, so it's ongoing development. But 50% of it, another 600 to 700 million rand, is investment in the projects to sustain the life of the business.
The Sibanye business model is your cornerstone for taking this, because you're confident that you can actually implement it in the platinum sector. But it's a different metal with different geologies. How much tweaking do you expect?
Well, our model, and again, none of our rationale for doing this transaction is based on enhancements we're going to make. That's upside.
Yeah.
Even if we just achieve what Anglo American has been achieving and the platinum market changes, there'll be lots of free cash. But to answer your question specifically, yes, it's a different business, but it's very similar. It's medium depth, tabular, hard rock, labor-intensive mining, and we have lots of skills in those areas. In terms of the geology, you're right, it's different. Mineral resource management in gold is different to platinum, but there's still a lot of synergies in terms of shared overhead costs, shared services, and those type of things that are going to result in optimization.
They are not so far from each other. Springboard to more deals. You mentioned that in the presentation this morning. What can we look forward to?
Well, we have always been pretty outspoken that both the gold sector and and now the platinum sector can benefit from consolidation. This was a meaningful entry for us into the platinum sector. It's not our overall strategy to consolidate, but we do see opportunities, and where we have a willing seller and we are, of course, a willing buyer, and we can do it without undermining our dividend yield thesis, then we'll do it. So we'll keep looking.
Thank you for your time, sir.
Thank you.
Neil Vroneman, CEO of Sibanye Gold.